It's just money. It's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat. It's not wrong, and it's certainly no different today than it's ever been. 1901, 07, 29, 1937, 1974, 1987, Jesus, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves. We just react. And we make a lot of money if we get it right.
What is going on, YouTube? Welcome to the program. Guys, this is Market Makers, your home for tomorrow's TA today. Often imitated, never replicated. Understand the environment we are in is extremely fragile in the marketplace. I'm laughing because I was watching Bloomberg this morning as the futures were selling off last night, NASDAQ just getting shredded. And the catalyst for this sell-off, according to all of the Wall Street analysts, is DeepSeek, which is a Chinese AI company, which basically, if you haven't been following the business news at all today, the Chinese spun up a company with a lower cost model. And the concern is the Mag 7 spending too much money on AI, right? That's the narrative Wall Street's pushing. Now, if you're watching YouTube TA this year, guys, 2025, understand the environment you are trading in, because this is the most overvalued market in stock market history. And what does that mean? It means it's fragile. These catalysts in the marketplace, such as PAL coming up on Wednesday, can drive the market up or down. And YouTube TA, by definition, the broad swath of these guys are reactionary. If you don't believe me, if you've been watching this channel the last couple of weeks, we gave you the January 13th low based off of a lunar cycle, based off of a 5-wave fractal that was repeating. I told you I thought it was a bottom. It was going to rally up. Go look at the thumbnails from the people that you watch. This is the head and shoulders. This is the major top. Oh my God, the market's so overvalued. We're going down 50%, right? That was a thumb. And then what happened? We bounced back up. Then it transitioned to on YouTube, is this a dead cat bounce? Where do I short this at? Where do you fade this at? And then it kept rallying. I told you it would make new all-time highs. We made new all-time highs. And guys, even with this sell-off, we're still stuck in a range. It's a trading range. Same with Bitcoin, even with the sell-off. So I think what's developing, again, we have PAL this Wednesday. We have to get through. Will PAL come off more dovish? Will he leave open the possibility of rate cuts so the market can get all euphoric? Or is Powell going to come off super hawkish and really try to stick it to Trump and a new administration? I don't know. I mean, just recent history, 2017, 2018, when Powell was raising and the market sold off, he was raising rates, market sold off. Trump gave him a tongue lashing. He immediately pivoted and started cutting, right? So just understand the recent history of this. But overall, guys, we talked about this last couple of videos. We were looking for a potential retracement top here with Powell out to February 12th. But I think this is setting up more and more likely to run into late March, mid-March, late March for that final top, for the big retracement down 10 to 13% in the S&P. Put a 3-factor on that, a 3x multiple for Bitcoin. You're looking at 30 to 40% on Bitcoin in this drawdown, which is why it's a big trade. So I'm going to cover all of that in the charts with you. And this is what I do on this channel, is market timing based on fractal patterns. What are fractal patterns? Fractal patterns are self-repeating patterns, patterns that happen over and over again at cardinal points, pivot points in the market based on natural cycles. The 2 key natural cycles you all need to be aware of for 2025, because this will be a roller coaster year. We made a video on solar cycles last year. A big famous YouTuber copied it. But we made a video on solar cycles. But understand, in 2025, you have solar maximum. This is an 11-year cycle. It got pulled forward from 2029. It's due to the solar activity, which emits flares, sunspots, etc. Right? So solar maximums are important to understand. Why is that natural cycle important to understand? Lee, show them the chart from NOAA. So guys, this is a government organization. They track solar cycles. Notice 1929, solar maximum. Notice 1972, solar maximum. Notice .com, solar maximum. And then notice the GFC, solar minimum. But remember, GFC was not a stock market bubble. It was a real estate bubble. So in 1929, the market fell over 80%. 1972 was the largest break in the S&P. The S&P fell 64% there in the early 70s. Obviously, .com, you had the 50% drawdown in the S&P, as well as an 80% drawdown in the NASDAQ. Crypto did not exist yet. That's the solar cycle. Solar maximum coincides with major market tops. What about the lunar cycles? As you guys know, we track the minor lunar cycles, but the major lunar cycle you need to watch this year is the lunar precession cycle, which is also known as the lunar nodal cycle. It's an 18.6-year cycle. It has, for lack of a better word, maximums and minimums. Okay, this has to deal with lunar standstills. I'm going to get into this more on the Discord for members. If you guys like this type of information, then definitely join the Discord. Okay, you can do that with our website, marketmakers.trade. But major lunar standstills happen in this 18.6-year cycle, and the next one is scheduled for 2025. Now, the actual max declination, peak declination of the moon will occur March 22nd of this year, which is very notable because it's the day after March 21st, a cardinal pivot in the market, the spring equinox. And you could say, well, why is that a cardinal pivot in the market? Spring equinox was the bottom of the pandemic. Spring equinox was the bottom of the GFC in March at S&P 666. Spring equinox was the top of 2000 back in March of 2000. The following cardinal point is the fall equinox. These are concepts I've talked about for the last couple of years on this channel. But if you're a new sub and you like this type of information, then definitely subscribe and click the like button. So we have a major lunar cycle, the lunar precession cycle, which is an 18.6-year cycle. And then we have the solar maximum. I think you're building up to a major top. I don't think this is the major top. Now, if Powell is hawkish, he could definitely start this retracement off. I mean, you could argue the retracement already started, right? But when I look at the buying pressure back on the market and how so many value indices, such as the Dow, didn't react as much, the DAX didn't react as much, it makes me think we're going to extend this, as we talked about, out until March because there are cyclical events happening in March. So we're going to look at all of that information in the charts. All right, guys, you know what, Lee? Before I get too much in the weeds, let's go ahead and start the show. All right, guys, before we start the show, once again, shameless plug. If you want to join our Discord community, check out marketmakers.trade. You control your account, 2 different packages, a website-only package or the Discord community package. It's a fantastic community, guys. And of course, your first week is always free if you want to try it out. No obligation at all. And as always, you get all of our market maker indicators for free if you join the Discord. Those are yours to keep. Our custom indicators that you see me use in every single podcast. Also, I wanted to bring to your attention Bitunix. We have a special promotion going with Bitunix. Right now, you can get up to 20% on your deposit up to $500. They pay out that bonus at the end of every week, guys. It's one of the best bonus programs right now in the crypto space. Anybody can use it. No VPN, no KYC. They have tournament programs running as well based on trading volume. So click our link and you can see that as well. And of course, SimpleFX, if you want to trade everything in the marketplace, including commodities, equities, Forex, and the big boy cryptos. You can trade all that on SimpleFX and get up to a $5,000 instant first-time deposit bonus only with our link. Both will be in the YouTube comments and the video description. Be sure to look at the timestamps if you're looking at particular assets because I'm covering everything today. I'm covering the futures, the spider, triple Qs, I got commodities, and I got the cryptos on here, okay? So let's start off on the Fear and Greed Index. Why don't I think this is the major top so far of the year because we're in fear now after this pull down with DeepSeek, right? That's the narrative. DeepSeek, we're in fear. Guys, I do think the major top, and especially if we rally out to March, which I'm going to show you on the charts, I think we're going to be in greed, maybe even extreme greed. And that's what I want to see. Could we get the retracement here? Yes, we absolutely could. We could be starting the retracement because, again, that was the first timeline I gave you guys was the 29th with Powell out to February 12th. And that's just about where we are. That's in 2 days, right? So we could be starting the retracement, but I think we got the pullback, and I think it's going to be a pivot to hold our trading range and move out. I want to see this in greed or extreme greed. Let's look at the valuation of the market. Again, look at this. The third most overvalued market in stock market history versus the Shiller PE. Just be aware every single time you've got up to these valuations, 1929.com, 2021, you've had major market sell-offs occur, but I don't think we're done. I would love to see us take out the 44 PE from .com, and that's a possibility, especially if we rally out until March. Let's check M2. I went down a rabbit hole I haven't been down in quite a few years, watching a lot of Milton Friedman podcasts and actually some of his old lectures as well. And I was watching him talk about M2 as how he tracked inflation. But this is what we're looking at here with M2, guys. So look at, first of all, let me zoom out. Let me zoom out. I mean, look at this. This is sick, right? So 1959, this is government chart. 1959, look at how M2, it really went parabolic with .com, right? You had .com, the sell-off, look at that spike. Boom. And I know people are talking about the money supply contracting. There's a famous economist that I watch, older guy, that talks about this all the time on the podcast. You always get a recession when the money supply so it retracts, I guess you could say. But look where we were. We were at peak liquidity there at 21.72 million, right? And that was back in January, March of 22. Obviously, that's the year the S&P fell 28%, the NASDAQ almost 40%, Bitcoin almost 80%, right, in 2022. And then we had this decline in M2. But look what it's been doing, right? Ever since that bottom, really, and well, this bottomed here in 2023, but ever since that bottom, it's just been moving back up. So you're at 21.45 trillion. So again, I think this market is still going to push up some more. If we look at the 10-year, everybody's tracking the 10-year, of course. You had a lot of buying in the 10-year. Why? Because of the market sell-off. So look, we have yields at 4.5. But again, this is what I've been talking about. Can yields go up? I know this is a big, I guess if you enjoy those podcasts where they talk about yields going to 8%, 10%, 12%, that's fine, whatever. I don't really care. It doesn't matter. I think yields are going to do what they always do. They can rise, they can fall. But when the market has a major top and massive sell-off, yields are going to fall because people will flee to safety. They will sell everything. And people who have to buy something, these funds that have to buy something that can't go to 100% cash, they're going to buy the bond market, right? And that's why you see that right there at 4.5%. You had the yields move down as well, but you are in a key resistance zone still for the time being. Now, I want to give you guys a quick walkthrough of the history of this market cycle with the S&P. Okay, so this is S&P futures, and I want to show you this. So we had our top over here, January 2022, right? That was our top. This is a 3-day chart, by the way, guys. So then we had the big sell-off, right? And we made a nice fractal pattern on the sell-off. Our 28% moved down. We made a 5-wave fractal. This is not Elliott wave. This is fractal pattern trading. This is my method of trading. We made a 5-wave fractal. Let's define our trading range, right? We had a climax sell here. We have a fractal low. We have our automatic reaction high. And then when you look at this, we had a pivot low, right? Pivot low led you to a bounce for a pivot high to a new pivot low. You got a 3 fractal reversal. The market coiled. You see this in cryptos all the time. It's slower motion in the equity markets, but it's faster in cryptos. The market coiled, led to a breakout. And then what happened? Livermore pivot, you back tested your previous fractal range, 4202, right? So I want to show you a couple of things here. So we have another 5-wave fractal for this big sell-off. This is something that we also traded. These are fun to trade when you're expecting these sell-offs, and your market timing and Fibonacci ratios work out beautifully. Another 5-wave fractal, and then our move up. Okay, so that's where we are right now in this place. So let's look at some targets as to where this could go. We had a back test of our fractal trading range and the explosive move up, and this is where we are now. We all know about the weekly divergences. We all know about the same stuff, right? The bears talk about the same stuff all the time. The bulls just keep throwing out big targets all the time. What I care about as a swing trader is timing the market for the big moves, the big retracements in the market. And the big retracement here was, what was this, 11%? 512 points, 11% move. We had the big retracement here, 10.5% move, and we had smaller retracements in kind as well. We had the small retracement before the large retracement, almost 6%. And what did we get on this current retracement? This was about 5.5%, 6% move as well, 5% move. So 300 points and 301 points on the current retracement, 311 on the other smaller retracement, 512 on the larger retracement, 601 on the larger retracement. But again, the pattern, guys, right? You have a large retracement, small retracement, large retracement, small retracement. The next retracement will be a large retracement. And I think that's coming in March. Let's erase this and let's look at targets. How do we get Fibonacci targets of where we are? You guys know my favorite pattern to trade is the W fractal. I make a lot of trades based off of this, and I'll just draw this here as well. I'll use the ABCD tool so you guys can see the Fibonacci ratios. So here's the W fractal we talked about forever on this show, right? We had the W fractal and it hit absolutely beautifully right up at the 1618, which is where we short it, right? We short it here. So if we pull our fib to measure this as well, this was 6,092, and on the S&P contract back when we shorted it, it was 6,110. So beautiful hit, nice retracement, almost 300-point drop, and then you had this other fractal pattern form, right? You had the 5-wave reversal to go back to the upside. So these 5-wave reversals, you either get a 3 or you get a 5. It's part of the law of 3. 5-wave is a completion of a harmonic cycle, right? Can't see it on the 3-day, but if I put it to the daily, you could see the 5-wave. But look at where we tracked out here with this pattern. So 6,092, 6161, which we hit almost to the dollar, 61.62 before this big sell-off, right? So we hit 61.61, but what's the next range up? 6,322. I'm going to show you why I have my kill box between 63.22, 64.64 S&P futures. So we have the 63.22 here, right? Because the 1618, remember, when you're looking at Fibonacci ratios, it's not just about laying out a ratio. Did it track? Did price react off of that ratio? And yes, it did. Great drop. Let's zoom back out. Zoom back out. Let's see if we can find Fibonacci confluence, right? The same way you see people trade who trade with a bunch of indicators. They say, oh, I got this confluence. Look at the RSI, look at the MFI, look at this, look at that. I like to do this with Fibonacci. Now in Fibonacci, again, when we zoom out on the 3-day chart, right? With Fibonacci again, we know this was the 10% drop. We know this was the 10% drop. So if I want to look at my next top, let me just denote these tops for you, right? That was the peak before the 10% drop. This was the peak before the 10% drop. So let me go ahead and remove these arrows and let's look at this. What we're going to do is pull a fib from that current peak with the 10% drop, which is Tuesday the 16th on a 2024 on a 3-day chart, back to the other previous peak, which is that July 2023, again, on a 3-day chart. Look how that lines up with the kill box, 6392. Let's call it 6400, literally right in the middle, right? So again, when you're talking about layering Fibonacci, I have a top pattern here that shows harmonic expansion out to 6400. I have the W fractal, which shows at 6322. Right? So 6392, 6322. Let's go ahead and draw that here for confluence so you can see that again, that Fibonacci ratio, 6322. And let's do one more. What about this current fractal range that we're in that we're trying to break out of right now? Let me zoom in so you can see this. I'll go to the next chart too so you guys can see this. But we pull this down from fractal high to fractal low. Look at the 1618. The 1618, or I'm sorry, the 200% move is 6412. So again, you're getting that 6400 level target from multiple Fibonacci ratios based on fractal patterns that I trade over and over again. So again, when I look at this, just clicking my box, 6322, 6466, and we're going to look at the timing because you guys already see my pivot points up here. So we're going to look at the timing on the next chart. We zoom in here on the daily. This is S&P futures still. We have the key pivots coming up. We have PAL with, again, a lunar cycle pivot. Hey, PAL could put in the low, right? What if we sell off with PAL? It puts in the low because we keep our structure. Again, where are we in danger is if you sweep the low, right? You sweep the fractal low, you're making a new low. So you sweep 5809, you're making a new low, but you're at 6,022. Look at the buying pressure. Again, I don't think this is the big sell-off. I think you're rallying into March. And so when we talk about those key cycles in the beginning of the show, the solar cycle, again, the solar cycle and the lunar precession cycle, what are the key points in that? The 14th is a total lunar eclipse, followed by the 21st being the spring equinox, the exact day of the peak in .com, by the way, on the spring equinox, and March 22nd, max declination of the lunar precession cycle. So March 14th and the next lunar cycle will be March 28th. I'm looking in that 2-week window, guys, particularly around the 21st, 22nd is when I'm looking for price to move to 63.22 to 64.66. Look for pivot points, though, here up and down in the market, right? This is what I like to do. So we'll see if PAL sends us back down. We need to hold 58.09. If PAL comes off dovish, guess what's going to happen? It's going to rally, right? It's a catalyst-driven, fragile marketplace. Understand those concepts, but this is what I'm thinking. I'm thinking we hold the low. In other words, not a new low. So 58.09, not a new low. We may be chopping and coiling, as you can see is happening right now in this range. I draw this all the time for you in the cryptos, right? Chopping and coiling, but I think we're coming up 63.22, 64.66. 10 to 13% retracement after that, 30 to 40% in Bitcoin. We're going to look at those targets as well. These are big swing trades when they occur and play out. So let's get through the catalyst with PAL, which of course is on the exact day of a full moon, which is, really interesting to see what PAL does. Because remember, these are pivots. These are pivots. It could be the low. We could sell off. It could be the low. Doesn't have to be the exact day. You're looking for a turn in the marketplace to be used as confluence, natural cycles. Let's go ahead and move forward. What about the spider? Well, my macro pattern that I'm looking at is Gann's law of three market pattern. This was his secret pattern, by the way, that he hid in his book, but it's a law of three pattern. So it's a giant ABC. That takes up the spider to 641.72. Now, again, everything in trading is about confluence, whether you're using Fibonacci or 55 different indicators, whatever you guys like to do or watch people do. But everything's about confluence. So we have the spider hit our 1618 from our smaller fractal pattern beautifully at 609. You hit it again and you sold off again. Didn't retest our trend line. But again, I think this is going to coil in this range, 609 to that 584, be in this range. I think ultimately you're breaking out. Now, from our larger fractal pattern, our giant ABC, to the 200% move of our current pattern, you're looking at 636 to 641 on the spider for that top. And obviously, this being reflective of the S&P, that's going to top the same time. So let's look at this. Another way we can measure this is this current fractal range from low to high. And the same numbers come up. 200%, 636, 642, 641, 633. All of this cluster here is what I'm looking at, and that low 630 up to that 641, okay? That's what I'm looking at for the spider to top out at, right with the S&P. And again, I think that'll happen in March. Doesn't mean we can't chop around in here. Maybe we sell off some more with PAL, but you want to try to hold your fractal low from your trading range. Okay, this is what you want to hold here, which is 575. You're at 596. Are there trades in between here? Of course there are. Lots of people trading these moves in the Discord, guys, longs and shorts, scalps and little swings. Okay, so there's moves in here, but ultimately this is the target. That's what I'm looking for. 630, 641 on the spider. Looking at RSP, what about the equal weight? Well, if it's a broad-based sell-off, it didn't affect the equal weight. The equal weight's at 181. This is heavily a tech-based sell-off, but of course they have a large weighting in the S&P, so the S&P got selling pressure as well. Equal weight, not so much. 181. Still looking at this. Look, could easily just be a lower high at 185. If it comes up for a new high, could come up into the low 190s. We'll see. Overall, what you're doing right now, if it does sell off more with Powell, is putting in a W fractal reversal, which will either make a lower high or come up for a new high in the 190s, possibly 197. Again, it all depends on if we get that big rally with the S&P after we get the coiling pressure. Let's look at NASDAQ futures before we look at the Qs. NASDAQ futures, my large market pattern, 23K at the 1618 on the NASDAQ futures, 23K. Remember this number, it's going to come into play once again. Let's look at the NASDAQ futures on a near term here. If we look at our W fractal once again, right? Here's our W fractal. I'll draw it for you guys right here. Do our W fractal. We're looking at the 1618 expansion ratio of our W fractal, and that takes you to 23.2. 23K on the large ABC, going from the pandemic low, previous all-time high, cycle low, 23K. 23.2 here on the NASDAQ based off of our W fractal for harmonic expansion. Even with the big sell-off, something I want to draw your attention to, look at this. Look at my screen. You're still in your coiling, building energy range. When you coil and build energy, what happens, guys? Break out or break down, okay? That's what happens from these ranges. My TA tells me I think we're going up, okay? Not down. This is a coiling range for that last leg higher. Put everything in greed, extreme greed, overbought on the oscillators, hit my Fibonacci targets. That's my trading plan. We'll see if it plays out. What does the NASDAQ need to hold? You almost came down to test your fractal low at 20,694. You want to hold that low, right? Remember, this is beta. It can move a lot more than the S&P. We have 23K, 23.2. And for our third confluence, let's examine this fractal range, right? If we look at the fractal range here, where are you on the fractal range? 23,052. So again, 23K from the macro pattern, 23K from the current fractal range, 23.2 based off of our W fractal. Everything's lining up. Again, cluster of confluence, Fibonacci cluster, 23K, 23.2. That's the next major resistance point I see the NASDAQ going to. And that's what you want to watch here on the charts as well. And this is the, while I'm on this, because I talked about the 5-way fractal, it's the same on the S&P, right? We made a video on this prior to that reversal pivot on the 13th, but look for your 3 and 5-wave patterns. They give you reversal fractals, okay? Let's go ahead and move forward. Let's look at the Qs. Large ABC pattern again. That takes you up to 559. You're at 511, right? 559. So again, confluence. Let's find the confluence for this move. If we just want to look at some layering potentials here, that's your 559. Let's pull our W fractal down here. Once again, the same exact W fractal, guys. It was made on the S&P. It was made on the NASDAQ. Therefore, it is present on the spider. It is present on the Qs as well, okay? And look what that brings you to. 559, the large pattern, 553 here off the W fractal. So 2 layers of confluence for the upside target. Now let's take our current fractal range, just like we did on the previous chart. Where does that take you to? 563 for the 1618. So you're looking at 553 to 563 for the Qs, okay? That's what you want to watch for your upside target. What do you need to hold? It's going to be the same across the board. And remember the caveat here when you're looking at tech. The caveat here is going back into this cycle in 2021. Remember, NASDAQ, Bitcoin, as well as the Russell all peaked in November, and the S&P ran up until January 3rd. So if this does put in a new low and start showing major signs of distribution, doesn't mean necessarily the S&P is doing that or the Dow, because they may run up again if they diverge. Okay, so it'll be interesting to watch. 499, that level, psychological level of 500, you really want to hold that. You're at 512. Could you dip below and pull back up? Of course. Remember, overall, look at the broader market, the S&P. Look at the broader market, see what it's doing. It drives the whole global equity space. If we look at the DAX, I posted a short on the DAX. I think it was Thursday. Right up there, we had the 1618 hit at 21,580. We had a nice, 450 point sell off here with the sell off here in the US, 452 point sell off. So that retraced some as well now, but that was a nice trade while it lasted. So nice move on the DAX, 21,580 is the key level to hold there. If it comes up to the next expansion ratio, you need to watch 22 to 21. Again, I expect it to have to coil and do some work. Got to get through Powell, got to get through the ECB in the case of the DAX. Levels you want to hold, obviously you want to hold your low that you made on the daily. 21,192 would be good, or you'd be retracing deeper. Bitcoin, 3 peaks and a domed house. You guys know, had this pattern for months. Peak 1, peak 2, peak 3, shared the diamond pattern breakout with you guys back at Bitcoin 31K, gave you that trade setup on YouTube back in October 2023 for a nice 140% move in Bitcoin. And this is where we are now in the domed house. Look how that thing's getting built out. Now, I put the peak of the dome house up at 120. Don't pay attention to the timing on this. I just want to draw it for illustrative purposes. I'll probably move this out if we keep seeing Bitcoin hold the range and move up. I put the peak at 120. Overall, as you guys know, we have key resistance at 115. Top of my range is 130. Could land in between at 120 right there at the peak. And we'll see where that peak is. That peak could be coming faster than the S&P peaks, or it could be a March peak as well. So we'll be watching Bitcoin to see if this pattern continues to track, but look how it's getting built out. Love it. Absolutely love it. By the way, if we come up to that 120, 130 peak right here, that's going to be that retracement level down when the market sells off. The S&P, that is, does its 10 to 13% retracement. That's what you're going to see Bitcoin do. Actually, let's just measure this just so you guys can understand the types of moves that you get here on Bitcoin as well. If we come up to 120 and do a typical 3 beta, as you guys know, on retracements, 3 beta, 120 would take you down to about 83K, 85K. There's nothing here though, right? So you're either going to hold this range here because this is an air pocket. You're either going to hold this range here down to the mid 80s, like 85, or, right, you're going to come deeper, right? Well, that would be a massive retracement at 40% to come down into that 70 range. But if you start off with the 130 top, remember, the S&P going down 10 to 13%. Bitcoin typically does. I mean, just look at the retracements of the S&P when it does a 10% retracement. What Bitcoin does, it does a 3 to 4 beta. You start up at 130 and you do a 3 beta, you're back in this trading range of the high 80s again, right? So again, it all depends where Bitcoin gets to. And because if you do a 4 beta and you come down 40%, you're back in the low 70s again. If you just use these tops as support, that's going to be a massive trade on Bitcoin, regardless of where it gets to. But that's what I think is going to happen. Let's zoom in on Bitcoin. So Bitcoin, again, sold off, obviously, with the marketplace FOMC. PAL is Wednesday. Next lunar pivot, the 12th. And of course, the total lunar eclipse on March 14th, followed by peak lunar declination on March 22nd, conjunction with the spring equinox the day before. These are your key pivots you need to watch. And if you look at Bitcoin, what it's doing, you need to hold this trend line, which is right at 92K. Now you can get a pivot low beneath it, right? But you want to hold that 92K. You're at 99.5 right now, selling pressure, obviously. Be nice to see if Bitcoin can do this, hold support, and then come back up, right? Because actually what you'd be doing is a deeper W type fractal like this, right? You want to see if you can do that move, but you want to hold 92K. And again, when we just look at this from our fractal high down to that extreme low here, that fractal pivot low right on the 13th, right when the S&P pivoted, right, on the lunar cycle. This is something you look at 1618, there's your 120 Bitcoin. That's just harmonic expansion. Bitcoin likes to move to 200% as we've seen this whole uptrend. That's 127. So again, we have that 115 mid-range target, but I can totally see this going to 120, 130 if the market can survive whatever hair pal wants to place upon us. Is he going to send Bitcoin down below 92, breaking key support? Or is it going to be able to oscillate, vacillate here in this range and keep building its immortal coil here of energy building for the next move? Also of note, you have your low and you have, if this holds up, your higher low. So you're still building that trend moving to the upside. Hold 92, 115, 120, 130 is where my ranges are on Bitcoin. The key pivots are denoted. Okay. Take a screenshot if you would like. Follow me on X. I talk about this stuff on X as well. Now we're going to cover a bunch of cryptos I don't normally cover on YouTube. I just want to give you guys my thoughts because XRP has been a hot one. And you can see we're holding this fractal support range here at 291. You're at 292. Overall, you had a level change. Here's your fractal corridor, your pivot to the upside, right? You pivoted out. And what are you doing? You retested it, bounced. You retested it, fell through it, got a pivot low. Market selling pressure with tech today, obviously with cryptos as well. You want to try to hold this range if you can. And if you start looking like that you're falling deeper, let's just denote some ranges where you could fall. You could fall down to the 264, which is basically what you wick. That's fractal support down there. Let's look at this with Fibonacci. If we go to this leg up here, that low, pull this up. We need some more numbers here. Let's look at the 0.5, 382, 618, 786. And we look at where we wicked. We got the 0.5 here, the 269. So, really ideally, you want to hold this 618 here at 253, which puts you back in this top range here for candle support, right? These highs. You have some structure support here as well. You want to hold 253 if things go a little bit crazy with PAL. And then ultimately, you'll be making this type of pivot if you got the 253. And it's going to all be about that next up move. That up move up. Can you take out the high? If you can take out the high, 353, $4 XRP. Those are my targets. Looking at AIOZ. Now I'm showing you AIOZ because this is my favorite AI coin because this thing really moves. And yes, by the way, you can trade this on Bitunix. If you look at AIOZ, the key support level you need to watch is 74 cents and just below it. Why just below it? Look at your fractal lows here in the range, okay? It hasn't come down to the 70 cents, but it definitely came down to 72. So if you can get this between 70 cents, if it can hold this range, all the way down to the 66 cent range, if you can get this between that 66 cent 70 cent range, 74 cent range, right in this range here. Why is that important? Why am I telling you that? Not a guarantee. Nothing in trading is a guarantee, right? But look at the moves you've had off of this level when you've tested this level. 87% gain. What about when you just came down and kissed it? Just this move, right? Just the move from 75 cents up to $1, 35% gain. Of course, if you apply leverage to that, these are big moves. What about that move when you came off 58% gain? And then, of course, you have this most recent move, which just occurred a couple of days ago on January 26th, Sunday, and it just rallied right back up 38%, right? Not in like a week, guys, in a day or two. So these are fast moves. Now, I'm not saying it's going to hold this. It's important that it does because you don't really have anything below here, right? You got an air pocket. So you got an air pocket down into the 50 cent range. But if you can hold these lower level fractals down in that 70 cent range to 74, 75 cents, and AIOZ right now is 76, just under 77 cents, it's capable of doing these really quick pops, which can just be really quick trade. You don't have to hold on to it if you want to. Obviously, do your own research. I'm just saying you as in the royal you. I'm talking about me. I don't have to hold on to it. I can sell it. I can dump it. I can get rid of it. It could be a quick scalp. But if it does break out and does move up and Bitcoin does move towards my higher level targets, I want to see AIOZ break out of this trend line range, which is right around $1.09. If it does, then I'm looking at AIOZ going $1.50, maybe even $1.70 if it goes bananas. But watch that range. Could be a good accumulation range down there. And if we look at Wi-Fi, Wi-Fi, I had been talking about on the Discord because a couple guys in the room like to trade this, was looking for a 5-way fractal down, giving us a pivot low. And previously I had drawn it that way, but it never materialized. It just retested support. And lo and behold, it finally got to my target there at 6,820. You're at 7,085. This thing's been a dud, obviously, but it's still in a downtrend. But what you're looking for is a reversal. Now, ideally, the washout target here would be 6,267. If Powell sends things down further, see if Wi-Fi holds at 6,267 level. That'd be a deep pivot low because, again, this doesn't have to be a hold for me. This can simply be a trade for me because if you come down, even from where you made the current pivot low, just up to that previous high is a 31% move. Crypto for me, guys, is about capping these 25, 35, 55% type moves and trading them with leverage. You don't have to be a hero and hold this thing and expect new all-time highs because you're getting massive moves in the marketplace, right? That's why people love trading crypto. Look at Solana. We had a new all-time high above 290. What did we get to on that? 295. So Solana, again, still doing its level changes. Fractal corridor, right? You elevate it out. You got on top, you made you fell through it, but you still made a higher low. And now you got your new all-time high. And as of right now, you still have another higher low. So again, this is all going to be about where this bottoms out at. Watch 210. That's the top of your fractal corridor here. If you came back down deep, again, if Powell set this thing down, watch 175 because that's what you held before. Could be a bounce area. But ultimately, if Bitcoin comes to my targets, guys, I'm still looking at 324, 360 on Solana. Okay. Favorite one to trade, Doge there. So looking at Doge, guys, your range high here at 48 cents, almost 49 cents. Showed you the 5-way fractal here, which is nothing more than the W pattern that we formed. We retraced right at the 786, sold back off. But overall, guys, this is still doing the same thing. Okay. So you have your low, and then you're just coiling. You made a high, you failed at the 618, you got above the 618, got the 786, retraced again. You're still just coiling here in Doge. It's building energy. The energy will be distributed up or it'll be distributed down. That's the key thing to understand with Doge. And understand that you want to hold your low here of 26 cents. You're at 32 cents. If you can stay in this range and chop around, flip 39, basically 40 cents. Flip 44 cents. If you can do that and accumulate level change to this new level, you're going up on Doge, and my targets would be 55 cents, 62 cents in Doge. When you talk about these numbers, I know they sound small, especially to people that don't trade crypto, but just from this recent low, coming up to that 54-cent level is an 80% move. Just to put it in perspective, in a normal non-stimulus, non-injecting trillions into the marketplace year, the S&P returns 8 to 10% a year. This is an 80% move. To the 1618, it's over 100% move, just going from that 30-cent level to 62-cent level, okay? This is why people like crypto. So watch these ranges there on Doge. Moving forward, linked, tested or back testing our trend line. Again, your range here is $20. You're at 23. Really want to hold this. And of course, you watch your fractal pivot lows here. This is your pivot low. That was at 17.8. Be nice if you can hold the trend line, bounce around. You got to flip 26 bucks. After that, you got to get above 28. If you can get above 28, accumulate. Again, everything's about level changes, right? You have level 1, you come up to the next fractal level, level 2. If you lose it, then you're down back into level 1. It's all level 1 down here in your fractal range, and you're trying to exit level 1. Your next stop will be to retest these highs above 28, getting to that 30 range, building energy and moving up to 34, and of course, 39 there on linked. Moving forward, looking at gold. Gold, look at this triangle. So we had this nice triangle. We had a triple top pattern that formed here in gold. This is an 8-hour time frame. Top 1, top 2, top 3. You've retraced some from it. Very slight retracement. Had a bunch of harmonic patterns happening here. 3 drives pattern as well. And then what do? We retrace from it, punch through it, and now you're stalled out here, right? Just below 2790, just below your all-time high. Gold ultimately will move up with the markets. It should also show you it's going to sell off with the markets. That's what it did in the GFC, guys. Gold fell 34%. I would expect gold to retrace when you see the markets put in a top and retrace as well. But until then, if we get to my market target, gold has 2860, 2950. Next 2 levels up on gold. If you get to 2950, you would love to think you could get to 3,000. Why? key psychological number, right? So much of the market is psychology. Levels you want to hold, you don't want to revert, right? So you don't want to revert. You really want to hold 2,700. You're at 2,739 right now. Like to hold that level, stay out above the trend line. Maybe you back test it more. We'll see. But right now, you just have a little bit of a baby topping pattern here. A little bit of a head and shoulders could be forming. We'll see. Because ultimately, you want to accumulate, build up energy, get your move out, right? That's what you want to see. Looking at oil by request as well. Look, I mean, from my recent peak high, you needed to get to 79.84. You almost got there. You got to 79.44, and now you're selling off some, but you're finding support right at a fractal level, right? So here's your miniature fractal corridor here that you built, this little accumulation spot before you bounced up. And that's exactly where you retrace to. You're trying to find buyers here. This is previously where you paused to get that last surge up. So what is the law of the market? The law of three. What do you typically see after stronger sell-offs, right? After stronger sell-offs at some level, you will get a bounce. This could come deeper still, but you will get a bounce back up, an ABC pattern. This is how you form double tops, right? Top one, potentially top two, especially if you get a lower high. That's a tradable move if you expect it to go back up. But this is also where you can see reversal patterns get built. Let's say you come down to 69 and retest this fractal corridor where you spent all this time building this energy and bursting to the upside. If you come back down, you could come back up, retest that resistance, pull back down, and come back out with a W reversal pattern. It's all about trading, guys. 3 and 5 wave moves in the marketplace. Depends on your thesis on oil and depends what you think. If you think you're bullish or you're bearish, but right now you're selling off to a key support structure. 71 to 73, you're at 73 right now, and then watch 69.70 just below if it continues to sell. But ultimately, you're going to get some type of bounce because just like we were talking about, there's your ABC, right? There's your double top on top of the range, capitulate it, how to fall back in, build up new energy. Looking at Meta. So big tech sell off, but then what happened? Meta bounced back up 652 right now on Meta. Nice triangle breakout, right? So let's look and see where Meta can go. Been tracking this as well. 1272 is exactly where it hit. 654 sold back off. 1618 said 674, and of course 200% would be $700 Meta. And I think if the S&P gets to my target, it's going to have to be carried by big tech, at least the performing ones. I would not be surprised to see $700 Meta. You're at 650 right now. Let's see if you can get there by mid to late March. And if we look at Microsoft, we've been in this channel. You can see how well it's been performing. You look at the 786 at 450. That was key resistance. Sold back off, pivot low out of the channel, and now you're bouncing back up 434 on Microsoft. Again, the big sell-off that produced multiple hundreds of points on the NASDAQ today and losses, which is over, I think, 1.2, 1.3 trillion. You're getting a rebound in a lot of these stocks, guys. Market waves, right? Market waves. NVIDIA got brutalized here. We had a beautiful hit. We've had this for a long time, as you guys know, 149.99. Again, harmonic Fibonacci expansion. Where we hit, we recoiled, tried to build energy for an upside move, boom, right? And again, could this be literally the DeepSeek narrative, right? Just because of that narrative, big Wall Street investors taking money out of NVIDIA because DeepSeek built basically, supposedly, a very effective platform at a much lower cost. They didn't use because supposedly, again, I'm saying supposedly, because China's not supposed to have the best performing GPUs. Biden banned that, right? Did they get them anyways? I don't know. So we shall see where we're going here, but let's just pull a fib on this. Is that the high? That's the high. So your 618 is right at 114. Would not be surprised you're at 117, 118. So it's not a big reach. Coming down to the 618, 114, and then you really want to hold 104. This thing keeps falling. You want to hold 104. And guys, guess what? Even if this is done, right? Even if someone says, hey, this is done, it's cooked, it's done, it's not going to make a new all-time high, it's going to rebound, okay? It's going to do an ABC move where you have your move up, right? Your first peak, you're going to come down, and then you're going to come back up. It's always going to do an ABC move at some level where you have a peak, potentially a lower high. And again, I think this is going to get bought at some level because people can't resist it. Why? Because these same analysts that are worried about DeepSeek are the same analysts that are telling you, hey, by the end of the decade, this $150 stock is going to be over $1,000, right? In the next 5 years. So they're going to buy it when it hits a spot that they like. And I think that spot could easily be north of $100. Like I would think the line in the sand's 100, but again, this may just come down to that 113, 114, 105 area. It's going to get a bounce though for sure. I can't imagine retail is going to let it go past 100. Look at Apple. Apple's getting a bounce. Why? Because of the illustration I just gave you guys. I told you no matter how much this sells off, it's going to rebound at some level, and then it's just tracking the rebound to where it goes to, right? So Apple key resistance, here's your trading range that you try to break out of. Key resistance is going to be 244, 251. Apple's only 231 right now. Obviously, big tech sell-off today, so you may be stuck in this range for a little bit, but Apple's got a nice move. It's up 4% today here on the daily chart. A couple more charts left, guys. We're wrapping the show up. Google hit our target, 200%, but again, Google, it's got a flagging, this is an ascending flagging type pattern here, but it's basically trading in this channel range. 195 is where it's at. It hit 202. Again, this is not a big sell-off we're looking at the Mag 7 because of their weighting. Remember, they're responsible for the vast majority of the gains in the marketplace. So when you see Amazon doing well, obviously NVIDIA is falling apart, Apple rebounding, you want to check these out and see how they're doing because it gives you a preview into the market. Here's our Amazon bullish flag breakout, right? We got above the 231 like I told you we would. The next target's 250. We sold off today. Amazon's right back up. I think that's what's going to happen with NVIDIA at a certain price level, 100, 105. People are going to step in. You're going to see a big God candle come up on it, right? So Amazon is still down here on the day, but it's only down 88 cents, right? It's only down 88 cents at a big recovery from 226 to 233. I'd call that a big recovery in stocks. Tesla is still navigating around that key level that we had, 414. We had lined out here. But again, if Tesla comes back up, you want to stay above 373. You're at 395. I mean, you're building a little fractal reversal here as well. Nice W fractal forming just like that. And then you have 440 to 463 right here as key resistance. If Tesla can break out with the broader market into March, I'm looking at 560 Tesla and, of course, the sweet spot of 600 Tesla. But to get there, guys, my thesis has to come true about running up into mid to late March, which means this is an energy range. This is a Tesla coil, if you will. The jokes aren't getting any better, Lee. It's about time to wrap up the show. Guys, follow me on X. I am Market Canary, at Market Canary, and I answer your comments and questions as always here in the YouTube comments. And guys, hope to see you on the Discord. I'll see everybody next video. Have a fantastic week.